270,000. The movements I cannot work out because I've got, still at this stage, I've got, let's just take it out again, I haven't got the depreciation yet. So I cannot work out the movements yet. But my carrying at the end is 265048. So my carrying at the end is 265048. So the movements will then be the difference between these two. I said this one equals that plus or minus something. So I'm going to start by using the balance at the end and then do the opposite. So it's 265048 minus 270,000, and that then gives me a minus of 4952. Minus, put a line in there. Okay, so I now know what the total of my movements is. In other words, that amount is minus 4952. So if I've got the total, I can work back to the missing item. So if I know the total is 4952, I must just do the opposite to get to the missing item. So if it's minus 4952, then minus 100,000. So minus 4952 minus 100,000 gives me minus 104952 plus 46070, and that will then also give me 58882. So I could either go, I can also go that way, or in this case, we haven't got enough information, but the norm would be to calculate the accumulated depreciation or the depreciation. Let's just do it as far as we can. You'll see that it is not possible to, we haven't got enough information to do it complete, but let's just do it as far as we can because this would normally be what you need to do. When we calculate depreciation, in this case for equipment, we've got to split it into three sections. It would be the old, which would exclude the sold. To that, we're going to add the new, and thirdly, the sold. So let's start by old excluding sold. The method we use is very important for equipment. Let's just go back to the question. Equipment is 20% on diminishing balance. Diminishing balance, same thing as carrying value, same thing as book value. It just means cost minus accumulated depreciation. So equipment, 20% on diminishing balance. So the depreciation is 20% diminishing balance. Diminishing balance. Let's do it complete. Right, so which means we're looking at cost minus accumulated, but it must exclude sold. The old means the opening balances. So the opening cost was 450,000. Cost was 450,000, but we must exclude the cost of the item sold. The cost of the item sold was 80,000. Go back to your asset disposal. So excluding the cost, take it out. It is 450 minus 80,000 gives me 370,000. From that, I must deduct accumulated depreciation. But again, I must take out the accumulated for the item sold. The old mean opening balance, 180,000, minus the accumulated for the item sold, and that I would get from my asset disposal. There it is, 33,930. Minus 33,930 up a bit. And that gives me, which I must deduct from the cost, an amount of 146070. So if I deduct the accumulated from the cost for the old, I will get to the diminishing balance or carrying value. So my diminishing balance is 370,000 minus 146 gives me 223,930. That I must multiply by the percentage, which is 20%, so 20 over 100. And that will give me the depreciation of the old, which is 44786. To that, I've got to add the new. Now the new, I must go look at what was the new. The cost of the new was 100,000, and it was bought on 31st of August. Both those bits very important. So the cost was 100,000. On that, I've got to work out 20%, but I cannot work it out for a full year. I did not buy it at the beginning. With new as well as with sold, there will normally be months involved. So know that you've got to multiply it by a number of months. For how many months did I have it? I bought it on the 31st of August. Our year end is 28 February. So I had it from the end of August till the end of February. So I had it for September, October, November, December, January, and February, which is 6 months. So I must multiply it by 6 over 12. And that would give me, if I do the calculation, 10,000. Good. Now we get to the one we cannot calculate. The information that they give us, if I go back to the information, the only information they give me for depreciation is the depreciation up to the date of sale. In other words, up until the 31st of August. I need to work out the depreciation for the current year. In other words, from the 1st of March until the 31st of August, and there is not enough information. So in this specific activity, I couldn't use this bit. I had to use one of the first two ways of calculating the depreciation. But in the next activity, we will look at one where we actually calculate the depreciation. So that is your note 3 for this activity.